Let's shift focus and talk about the big trends as far as the global markets are concerned and how India will be impacted in that light. We did see a bit of a trailer, couple of days, for 3 days. There was nervousness in US tech stocks, and India also had caught cold along with the rest of Asia. Luke Browne is here with us from Manulife to talk more about that. Luke, tell us, what are your thoughts on some of the risks which may be emerging at the horizon globally right now? Tech stocks got a bit corrected and then everybody got scared. What are your thoughts on that?
So, look, clearly there has been a dramatic increase in volatility over the past few trading sessions. Now, the work that we've done and our views, certainly from a macro landscape, is that fundamentally nothing has changed. Clearly, we've seen in the press that there have been some very large transactions going through the market, in particular in option strategies. Now, what this led to was something of a squeeze for the traders and the investment banks across the street. And our belief is that this is more of a technical correction, with some of those positions being unwound. And indeed, the central view of the team is that, having a little bit of froth taken out of the market is no bad thing. So I remain cautiously optimistic, and I believe that, dips potentially present themselves as buying opportunities.
Right. Luke, how are you analyzing the quality of recovery which we are talking about? Some saying it's a V-shape. Now there's also a word coming in that it's a K-shape recovery. How are you analyzing the high frequency indicators globally to take stock of the quality of recovery?
Yeah, look, this is a great question, and K-shape is a new one on me. I've certainly heard people talking about Nike swooshes, square root signs, W's, etc. Now, our view has been and remains the case that there is going to be a phased recovery. Clearly, we have seen some very strong numbers across the globe of recovery in GDP, in growth numbers. However, I think we're now getting to the critical juncture through the last quarter of this year and into 2021, where there is the potential for something of a stall out, for a decline in the rate of recovery. Now, that to me could be the catalyst of where we need to think much more cautiously about where we want to allocate to markets. Now, the high frequency numbers, as you note, are something that it's always critical to look at. Interpretation is everything. We shouldn't lose sight of the fact, for example, that something like 22 million people in the US lost their jobs. Now, we have seen recoveries in these numbers, but looking into the data beneath those top line figures to understand the productivity that's being created by people returning to work. Are they full-time, or are they doing less hours than before, for example? These are the kind of details that we need to look at to get a very detailed and solid understanding of the potential path of global recovery.
Right. What are your thoughts on flows to emerging markets like India? We saw some flows picking up. Dollar index is also dipping. Strategists say that there's a case building for that emerging markets may be recipient of bigger flows going forward. Do you agree?
I most certainly do, and certainly from a strategic point of view, we remain constructive on emerging markets. By strategic, I mean, looking forward out to the next 5 years of where we see different asset classes performing on a relative basis, and we do like emerging over developed economies. Now, you touched on the dollar index there. And I think, as all of us would recognize, emerging markets can be particularly influenced by the strength or weakness of the US dollar. So in the shorter term, I think what we need to look for is what happens with the US dollar FX rate. Ongoing strength is likely to be something of a detractor for the emerging markets. So we're watching carefully the demand for dollars, the flow of money, what liquidity is being added. Should we see further weakness in the US dollar and it continues on that medium-term trend that could be more weakening, again, that should be supportive for emerging markets and allocations within.
Luke, there's an event which is coming up, that is US election, which most money managers globally are watching out for very closely. Some are nervous that it could trigger volatility in risky assets. Others say it may not, but it is definitely a key event to watch out for. What are your thoughts there?
Yeah, look, you're absolutely right. The way I look at these things is that uncertainty in markets typically leads to an accompanying rise in volatility. Now, we can look at certain indicators. For example, if you look at the VIX index and the reference of volatility in US equities, we do see that there is something of a hump in that curve around that election event risk. So already to some extent, there is a degree of uncertainty being priced in. Now, in talking to our macro team and economists, we are much more relaxed about the eventual result of the election. Clearly, we need to watch and see how the campaigns are evolving, what rhetoric we get, what focus there will be from both the Biden and Trump camps. Now, post the election, my view is that we are going to continue to have support from the Fed. We are going to continue to have liquidity. And on the fiscal side, that should bleed through into the economy. But as we all know, we need to watch the impact and effectiveness of any fiscal spending, what's going to happen with global inflation and what opportunities that gives us. So I would sum that up by saying, yes, elections are a risk. However, in this case, I don't see that there is a particularly different outcome of Democrats versus Republicans.
Luke, my last question to you is on a broader issue, which is so much of liquidity is sloshing around globally. Yields are difficult to come by, at least in the developed markets. Commercial real estate questions are being raised as an asset class. Gold is, of course, a safe haven. What would actually be a favorite asset class for investors across the globe in a post-COVID world, 3 to 4 years, going ahead?
Yeah, look, I think as ever, the first thing to understand is what are you trying to achieve with your allocation? So I think for those investors that are seeking greater stability and are looking to the longer term, then I think, we need to remain constructive across the board from, if you look into credit markets, select government bonds, all the way through investment grade and to high yield. Now, across equity markets, as I've already mentioned, we are more constructive on emerging and indeed Asia from a strategical point of view. So I would encourage people to be looking within those markets at managers who have particular presence on the ground and are able to add value through selecting the right individual securities within the broader index that they're looking at. From a shorter term point of view, as you've noted, gold remains interesting. And I think, the utility in portfolios there is one both of potential returns, but also of some more defensive characteristics. If I look more specifically into Asia, we do like China, particularly in fixed income. We do like emerging market debt, and that's in local currency as well as select US dollar currency. And obviously these views evolve as we see the path of the US dollar strength, weakness, etc. So it is very much a case of being opportunistic on the short term and understanding the evolution of markets, whilst at the same time thinking more strategically about where the growth potential is and what is likely to drive returns in those portfolios in the medium term.
Right. Luke, this question you may choose to answer or not. Just wanted to get your candid view on the material you're reading or the research reports and overall the information you're gathering, and how far could we be from a meaningful discovery of a vaccine as far as COVID is concerned? Or do you think that world over people are coming to grip with this and are trying to figure out a way to live alongside this pandemic? What are your thoughts there? Because high frequency indicators do indicate, at least back home here in India, all the resorts and hotels around Mumbai are packed over the weekend. People are coming back to normalcy gradually.
Yeah, look, I think there are a number of dynamics to this. Now, clearly, if we look at what's happened over the past sort of 2 or 3 months, I think there have been a lot of headlines over the potential development of a vaccine. And this has been encouraging for markets because, of course, this leads to a speedier opening up of economies and less fear. Now, we have seen recently, one of the leading contenders to produce a vaccine ran into some issues in the trials. and they had to pause them. Now, we did some work with our healthcare specialists to understand, is this something that's normal in the development of a vaccine, or should we be more cautious? Now, the view there is that, this is perfectly standard practice, nothing to be alarmed about for that particular trial. Now, I think that the best guesses of people is that should a vaccine be developed, it's likely to be available towards the end of this year or in Q1 of 2021. Now, notwithstanding vaccines, your observations around what's happening in Mumbai and opening up, I think is a pretty consistent story across the globe. If we look into Europe, notwithstanding the recent rises that we have seen in infection rates, it seems to be much more clustered around the young. Now, I saw an interesting statistic the other day that, if you look at the mortality rates of COVID, it's something like 1,000 times more prevalent in the over 80s than it is in the under 30s. So I think economies and societies, are becoming accustomed to the idea that things can be opened up. We need to tread more carefully with the older generation and those that might have underlying health issues, but for the younger side of society, we should be pushing forwards, opening schools, opening restaurants, returning to a degree of normalcy. The one piece of caution I would encourage everybody to look at is consumer behavior and consumer trends. Spending and a return to a degree of the world that was is going to be critical in driving growth in economies going forward. We need to watch those carefully and make sure that we understand those patterns and the impact that they could have on asset class values.